this Wednesday's game plan. My name is Gareth Soloway, Chief Market Strategist at Verified Investing and InTheMoneyStocks.com. I'm coming to you live because we're going to cover a lot of stuff today. There is a ton to go over. We have crypto ripping. We have the banking stocks pummeled. As of yesterday, FRC dropped 50%, which again is a regional bank after basically I'll tell you exactly why they dropped 50%. Bottom line is that's helping crypto catch a bid. We're going to talk about earnings announcements. We have durable goods orders out there. So there's lots going on here. And I'm here to walk you through everything that you need to know to make money in the markets today. All right, so let's get right into the chart. Let's take a look at what's going on in Bitcoin here, guys. All right, so Bitcoin is ripping to the upside, just hit resistance at 30,000. Now remember, 30,000 to 30,500 is your key level of resistance. You can see what's gone on. Basically, since yesterday, when FRC, all right, First Republic Bank, when they basically had their earnings announcement, they came out and said that, hey, guys, we lost 40% of our deposits in the last quarter. In addition, we saw essentially our business stagnate. All right, that was not what Wall Street wanted to hear. 40% is a bigger number than Wall Street expected. And then to add on even insult to injury, all right, this is the kicker, guys. First Republic, FRC, they basically did not take any questions from analysts in the conference call, and they just said done. And they walked away 12 minutes after they started that earnings call. All right, to me, all right, now remember, JP Morgan, Wells Fargo, all these big banks gave them $30 billion to shore them up. All right, this was a couple months ago when the banking crisis occurred. And for them to just say, hey, we're not even going to take any questions, that is not basically, that's not uplifting to the sector. And so that stock got pummeled yesterday. And as soon as you saw it down 40, 50%, Bitcoin began to uptick. And it started to go better and better and better. Now, the bottom line is, as an investor, this is all inside of the levels. If we look at the chart on the daily chart here, let's go to the daily. So what we could see here is this is your 30,500 level. That is essentially your line in the sand. Like I just said, 30,000 to 30,500, that's what you're keeping your eye on. If we get above 30,500 and we close, you want a daily close, and then you want multiple days, I say 5 to 7 days above that 30,500 level. Now you have a confirmed breakout and you likely could head higher. Aside from that, be very skeptical of this move, because if the banking crisis does not get worse, this resistance at 30,500 to 30,000, that could ultimately end up being a top, and we still could see Bitcoin moving back to the downside. In fact, just to give you a heads up, I picked up a little bitty. If you've been following my Twitter, all right, you remember that last time we hit 30,000 to 30,500, I bought BITI, which is a short ETF. When you buy it, you go short the Bitcoin futures. I covered that for a nice gain, obviously, or I sold it for a nice gain when Bitcoin pulled back. I've now re-entered that trade, and I'm seeing if we can't get a good pullback on Bitcoin off of this technical resistance at 30,000 to 30,500. Okay, so that's a little rundown of what's going on in the crypto markets. Now, before I get into the Ethereum markets, I want to just mention something, all right? I partnered with Bybit here, and it's a simple thing. They're a sponsor of this show, of my channel, and it's actually a pretty cool thing, right? So for just $250 in an account, you can try your best to do the best you can in terms of making money in crypto. And if you make the most, you win a Tesla or $40,000. To me, it's like, okay, $250, if I can 10x it in a month or whatever, a Tesla, okay, that's a no-brainer. So for me, it's one of those things where it's a risk reward, right? You guys know I'm a trader, all right? Everything's risk reward in my world. And I'm, normally I don't do this type of thing, and it's like whatever, but it's like, okay, risk 250 potentially, and maybe I make a little bit of money, maybe I don't win, but I still make more money than I had. And the bottom line is, if I make the most out of everyone in this trading challenge, win a Tesla. So honestly, makes sense to me. I like that opportunity. That's a good risk reward opportunity. Okay, so let's go back into the charts here. Let's look at Ethereum. What do we have on Ethereum? Ethereum is rallying, but look at the chart here. Look at where we're hitting. We're hitting resistance on Ethereum here. This upsloping trend line, a beautiful upsloping trend line. This is the key point. Now, one of the things I want to mention here, look at how Ethereum is not at the recent highs like Bitcoin is. What does that tell us? It tells us that Bitcoin is your pure play when the banking crisis is going on. Sure, you're seeing a bit in Ethereum, but it's not the same magnitude that you're seeing in Bitcoin, because Bitcoin is a pure play. Always remember that in 10 years, 20 years with Bitcoin, it's the pure play, just like gold is the pure play. If I had to put it in comparison, I would say Bitcoin is to gold as Ethereum is to silver. All right, think about that. Think about how silver doesn't really go one for one with gold, because silver has an industrial side to it plus a store of safety. Gold is just a pure store of safety. So kind of a cool little concept to think about. Bitcoin equals gold. Ethereum is equal to silver when it comes to investing. All right, so watch this level around 1960 on Ethereum. That is going to be a very pivotal level here. Let's see if we get through that. All right, now we have to get into some other economic news and some earnings news. We got to bring up Microsoft, guys. Microsoft coming out yesterday, beating earnings across the board. In their conference call, they said guidance basically was going to be very strong going forward. The stock is ripping. Now, this is interesting because even though it's ripping, look at where this line is, where it's showing. Right now, we're trading at 297. There's a key gap fill at 297 here. So that is resistance. So there is resistance at 297. If it breaks through 300, you could go as high as 311. 311 is another major pivot. When I see gaps on mega caps, trillion-dollar companies like this, what do? I start looking for a short opportunity, because number one, that's a huge move for a trillion-dollar company to make, almost 10% to the upside. So look for that, folks. Again, I'm starting to eye potentially the short side of this right here, 297 to 300, maybe a pierce of 300 at the open today. Look for a short on that. That would be a slow accumulation. Leave yourself room. If we get up to 311, add to that position. I think those are your two key adds. I think ultimately you will see this pull back. I'm still in the camp on a macro basis, by the way, that we still see a recession in the second half. You're seeing economic news continue to weaken. The jobs number continue to weaken. All this stuff is continuing to show us likely recession. By the way, the Federal Reserve actually told us a mild recession in the second half. Like I've said in so many interviews since I said this the first time, if they're saying mild and they said transitory, and look at what we got. All right, they said transitory inflation, we got horrible inflation. They say mild recession, it's probably going to be a little bit worse than mild recession. By the way, one more little tidbit, the Fed will be announcing a rate decision next week on Wednesday. The expectation is a 25 basis point hike in interest rates. So they're still hiking here, guys. They're still tightening the noose, if you will, around the economy. All right, so we covered Microsoft. The only economic data of interest today was durable goods. Durable goods did hike better than or jump better than expected. However, if you take out automotive, if you take out transportation, it was only up a little bit. So it's not a huge deal. But again, it was better than a weak number for sure. Now, Google reported earnings, also decent earnings. But look at this. The stock's barely up. Yesterday in the after hours, the stock was up much higher, above 108. It is now barely positive. So earnings for Google were mediocre. They were pretty good. But the biggest kicker here is they announced a $70 billion stock buyback. Folks, that is a massive amount of shares they're going to be buying back. All right, it's essentially a buyback for those of you in crypto is essentially like burning a token, right? If you're burning some of the token, you're getting rid of it. You're taking it out of the float, essentially. So just keep that in mind. That's a huge buyback that will give a low-end support level, but I'm still ultimately bearish on Google in terms of what they're doing right now. They seem to be a step behind in AI. They seem to be a step behind in advertising based on the slowdown. So look for that to come in over the next multiple weeks to months. Now, end phase. This is an interesting one. End phase is getting hammered. Where's the buy level here for today? Let's talk a little bit about this. So right off the bat, the stock is down quite sharply here, about 15% pre-market. Actually, it looks like it's closer to 20%, trading just below $180. First thing I see right off the bat here is there's a pivot low at 169 to 170. So that level, basically 170 today, is going to be what I'm going to be looking to day trade and potentially starting to scope out where I want to maybe swing trade this. But right now, as a day trading level, a pierce of 170 is my first zone to play. All right, Boeing this morning reported earnings. Let's keep going. Let's just keep rocking through this. All right, there's so much to go on. We'll go back and check in on crypto in just a little while, and we'll see if that level of 30,000 is breaking. I'm sure you guys are watching it live, even though I'm getting distracted by some of this other stuff. Boeing reported decent earnings. Stock is up. Now, notice here, last week we had Netflix, not so great earnings. Tesla, not so great earnings. This week is different. As of last night, when the tech earnings reported, the earnings that came out, whether it was Visa, Boeing this morning, or Microsoft or Google, much better than expected. It came on the back of a very sharp sell-off in the equity markets, which again basically put us in a position where we were expecting the worst case yesterday. Now, if we had gotten bad earnings, we'd probably be down a massive amount today, considering the bank stocks getting crushed and then bad earnings. We didn't. Those earnings came out better than expected. It is buoying the markets today. If we go to the SPY, all right, here's the SPY chart, and I have a lot of little trend lines on this chart from day trading. But bottom line is, what we can clearly see here is that we are gapping up on the spiders. But this is what's interesting to me, right, is that even with all this good news on earnings, look at the spiders. We're only getting back. This is where we closed yesterday, right here, and this is where we are today. You're only up about $1 on the SPY. Now, part of that is the bank stocks. I saw FRC was still down. Yep, it's still down, folks. So again, that's still under pressure. But the bottom line is, even with the good earnings, you're not seeing a huge impact on the S&P 500. Even on the QQQ, you have Microsoft literally up 10%, one of the biggest companies in the world, the biggest, second biggest probably to Apple in the NASDAQ 100. And the QQQ is only right back to resistance right here. Look at these lows. Look at this. All right, this was a breakdown level yesterday right here at 313. Guess where we're trading today? Right into resistance. So what does this mean to me? It means to me overall, this market is looking for reasons to sell off in the equity side. Now, whether or not that's good for crypto, we're going to find out. Right now, it is good for crypto. All right, even though you're seeing a little bit of a bounce here, a lot of that bounce in crypto is a relation to the banking crisis and the safety trade, right? We see the Bitcoin leading the charge. But bottom line is, you're not getting a very oversized move in the QQQ, and that to me would be concerning going over your next couple weeks of trading, especially ahead of the Fed next week, where the Fed is likely going to stay relatively hawkish and hike by 25 basis points. All right, I want to cover Chipotle, CMG. Now, this is a thin stock, so you got to be careful trading it, right? So a thin stock for sure. But look at this. We're getting right up into a double top up here, right around this 1960 level. Again, earnings were good on Chipotle, probably because I eat there like 2-3 times a week. But bottom line is, again, that stock is higher, very sharply higher. To me, double top starts to look interesting. I would personally look for a pierce of the 2000 level. Even numbers in trading are unbelievably important. Unbelievably important, all right? All right, so just keep that in mind. I want you guys really focused on understanding how important even numbers. By the way, that's one of the reasons why I looked at the 30,000 area to 30,500 on Bitcoin. By the way, look at what Ethereum did. Ethereum pierced 2,000 recently, right? It took out that previous high barely and then sold off. There's a tendency in markets, and this is psychologically based in human nature, for us to hit key levels and pierce them. All right, you have stops there. You have people that will jump on board at those levels. Think about how many people jumped on board on Bitcoin when it pierced 30,000 thinking it was a breakout. Yet ultimately it dumped out, took a lot of them out. Now it's retracing back up to that level. All right, so we're going to keep an eye on that. If we look at Bitcoin, by the way, it has pulled back off that 30,000 level very slightly, though, trading back at 29,850. All right, so again, we know 30,000 to 30,500 is resistance. That's really all you need to know. Remember, a technical trader doesn't care necessarily whether it's where Bitcoin's going in the next 6 months or 3 months or even 1 month. It's where's the resistance near here where I can tell if it's going to go higher or pull back. And right now you're up into resistance. You're just underneath resistance. Therefore, as a technical trader, you favor a pullback. If it gets through that level, you start to go into neutral. If it stays above that level, you go bullish. It's very simple like that. It's no emotional trading. It's pure and simple. Follow the levels. Let the charts tell you. I always tell my traders this, and this is important to understand, is that the charts, when most people begin looking at them, it looks like a whole hodgepodge of nonsense. Really, what it is a foreign book, a book written in a different language. And it's up to you to learn that language. And when you learn that language, you start to get insight into the most probable. And this is important. It's not the guaranteed move. There's no such thing in trading. All right. Every day I'm out of the money on a trade, or, with all the trades I do, there's always a trade. I'm losing here. I'm making money over here and here and here, but there's always going to be a little bit of a loser. So the point is that it's all about probabilities. If you do 10 trades in a day, you want to win 8 of them. And the ones you lose on, you got to recognize quickly that you're losing on them and exit them. That's how you make millions in the markets. You don't make millions so many of these people out there, these newbies, they think, okay, I have a $2,500 account. I got to figure out how to make $25,000 by next week. not reasonable, because yes, you can bet the farm, make money. Like heck, in 2021, everyone was making money in crypto. Everyone was making money in stocks. That's ultimately not feasible long term. Eventually, you pick a bad one, just like anyone, just like I do. Eventually, I pick a bad one. And ultimately, you go broke when you bet the farm on it. And that's the problem. Make your millions, and you will make millions if you follow the recipe. Technical trading, personal discipline, position size. Those are the ones you want to follow. All right. In any case, what we're seeing again here in the markets is a slight up day. We're continuing to grind higher. And again, what I'm looking at here, I can see if there's a couple questions that people want to look at. Let's look at gold. I want to make sure we check out gold here, see what gold's up to this morning. If we bring up gold on the charts, gold to me continues to be in a sideways consolidation pattern. Ultimately, this is the beginning of bullish consolidation that will lead us through the all-time highs on gold. But I still think you're due for a pullback to around the 1900 to 1915 level. If I zoom out the charts, and this is all charting again, just letting the charts dictate to me. Short term, we're extended. You just need a pullback right in this range, about $100 on gold. Then I think you bounce off of that and you start making new all-time highs. You break through 2100 and you're probably headed towards 2400 by end of year. Now, if we look at silver, let's take a look at silver here. Silver, same thing, extended. See this downsloping trend line? That's where you're looking to pull back to. That would be a buying opportunity. So again, I remain midterm bullish on gold and silver. Near term, I still think they're a little overbought. They got to work off the recent move. Think about a marathon runner. You just ran a marathon, amazing amount of distance there for those of you that do that. All the credit in the world. But you do need a break, right? You can't just run another marathon right after. You need a break. You need to recharge. So when a chart makes a huge move up or down, it needs consolidation. Consolidation is a runner's break. And that's a way to recharge the battery before continuing its next marathon. So with silver and gold, I think they both go higher, but you probably just need a little bit more downtime after such a big move to the upside. All right, so again, really interesting stuff on that. Let's look at the dollar real quick. The dollar, again, which is adding fuel to the fire today to Bitcoin and the metals, is down. Yesterday, we had a sharp move up on the chart. Today to the downside. By the way, I ultimately do think the dollar is going to go lower. Doesn't mean it can't bounce in the short term, but I want to show you this trend line here. If we bring up this trend line, look at this. Look at this right here. All right, drag this line out. All right, now you might say, okay, that's support, and you're correct. You are absolutely right. This is support. But the methodology that I teach tells you that the more you hit a trend line, the more likely you are to break down through it. So here you hit it once, 2 times, 3 times, and you're on the verge of 4. Usually by 5, you're in the borderline 50-50 that you could break through it, 50-50 odds. All right, remember, everything I do is probability-based, just the nature of it. So what this tells us is that if you keep hammering on this line, eventually the dollar is going to break down. Okay, when it starts to break down, what is that going to tell us? Well, it fits right in with the narrative that I've been talking about, that we likely see a recession in the second half. Because if we see a recession, what is the market going to factor in? It's going to factor in lighter easing policy by the Federal Reserve, and that ultimately means a weaker dollar, right? Lower interest rates, maybe printing of money down the line. All of that is demoralizing to the dollar. In addition, we can't deny the BRICS and what we're starting to see out there. That's a long-term trade. There's so many. I mean, one of the issues with social media is you see all these narratives pop up that are kind of ludicrous in the short term, but maybe have teeth in the long term. And I've been seeing all the demise of the dollar, everyone else's. That's like a long-term narrative that, yes, eventually the US dollar will not be the reserve currency of the world. But again, in today's dollars, that's not tradable. Like you'll end up doing a disservice to yourself, in my opinion, by pulling out of that scenario and positioning yourself for alternatives. Now, in 5 years, maybe that's a time to start doing that. We'll have to keep an eye on the charts. I'm going to still be here doing some analysis for you guys, I'm sure, in some capacity in 5 years. And I will tell you when I think is the opportune time. All right. So bottom line is Bitcoin, again, big pop, but we know we're into resistance here. Let's keep an eye. Look at that, 29,800. That short starting to play out on the BITI by buying BITI, which is short the Bitcoin futures. If we look at the S&P 500, one final check here. We are seeing, again, S&P up slightly on the morning session. Watch that Microsoft level, 297 to 300. Appears to 300 today, gets me interested on the short side, and then 311. And obviously, we'll keep an eye on all these others. Enphase, heck, Boeing, Visa, CMG. ATVI, I didn't even have a chance to mention today, but that one's an interesting one, falling sharply as the European Union basically saying no to the merger with Microsoft. But the bottom line is on ATVI, I don't see anything in terms of a trade until you at least get down to 71 or so. So on that note, guys, I'm going to bid you farewell. I got to get to my live trading room at inthemoneystocks.com where we day trade in the morning session here. Lots of good action. I'm going to be making money there. Come check me out. Otherwise, head over to Verified Investing, verifiedinvestingcrypto.com. Check me out there. And again, as always, folks, thank you for tuning into the game plan. I love you all. Stay with the charts. Get emotion out of your mind. Get that crap gone. You'll be a better trader and make more money by being a robot. Take care.